Hello traders, Gary Wagner here, just about 10:20 in Honolulu, 4:20 in New York. It is Thursday, October the 6th, 2016, and this is the Daily Report for Gold and Silver. And what a day. We have a continuation of the sell-off, which really began a couple of days ago. Market's been under pressure for the last week and a half, but it was really 2 days ago that we had a devastating move to the downside, about $42. That really due to selling, not so much the strength of the U.S. dollar, although that was a component. Today, we've got some real strength in the U.S. dollar, and it is weighing on gold. As we look at COMEX futures in gold, off about $12.50, $12.40 is our print, putting it off about a full percentage point. The low $12.51.80, the high $12.71.60. So as you can see, we've got about a $20 range, so we've doubled the range in the market and closing really midpoint, but closing near the lows of the day at $12.56. Let's take a look at spot gold. Spot gold also trading off by about $13 at $12.54.18, the low $12.50.05, and the high $12.69.41. Again, off about a full percentage points. Now, when we look at silver is trading lower on the day. That is off 2 1/3% or 40 cents per ounce at $17.30. That's when we look at spot. And lastly, when we look at COMEX silver, let's have that come in for a second. But when we look at COMEX silver, as you can see, that is off 36 cents or a 2-point drop at $17.33. Let's take a look at our first chart. So traders, here we are, really a couple of days after a fairly brutal sell-off in gold. Of course, gold has been coming down. There's no question about it. We had these failed tops, and we talked about this over the last couple of weeks, and it was what was really disheartening to me is when we take a look at these previous tops. This, of course, is the record high for the year at this point at around 1375 in that area. Market comes down 1308. We talked about that being a key level of support that was obviously breached a couple of days ago. But as the market would come down, it would find support, move back up, come back down, find support. But here's where we really saw a little bit of a difference, and that is on the last two rallies, meaning this rally here, which began end of August, beginning of September, and then the mid-September rally right in here. In both occasions, we got lower highs, not only than the previous low, but this record, not only highs lower than these record highs, but a consistently lower high in the market. Lower high, flat bottom, absolutely a break to the downside and a hard break to the downside. Now, yesterday, we saw a little bit of potential sunshine, so to speak. Clouds certainly came out today, but that is because we had this doji candle. Now, a doji candle can simply be a consolidation or rest area before returning to the overall direction of the market. And I've blown this up so you can see that in this case, absolutely what we're looking at is not any kind of a key or pivot point as we got here. And here you get these small body candles. After the market comes down, it consolidates and then you get that key reversal. But in this case, what we got was simply a rest area, a consolidation before moving to lower ground. We got one right here also. Candle color on these small bodied candles are not nearly as important as body size. Body size is what is critical. Now, we have now broken through a key level again, and that is the 61% retracement that comes in at 1266. Let's go ahead and kind of uncompress this one more time. Now, with that in mind, and the fact that we have the jobs report coming out tomorrow, the estimates right now on the jobs report vary between 150 and 172. What the Fed is looking for is some sort of indication that, in fact, what we're looking at is an inflationary scenario. We certainly have not seen that yet. And so I personally don't think we're going to see a move in November by the Fed to see some sort of a rate hike. But the odds are absolutely in the favor of a December rate hike. That being said, how low could gold go? Now, the one thing that we do want to look at is this particular area, which sits at around call it 1238 to 1240. That's a 78% retracement. Now, that's a retracement from this smaller move. And when I say smaller move, I'm talking about this dynamic rally, which went from 1200 to about 1375, so about $175 rally. Very, very similar to this move here from about 1050 to about 1280, somewhere in that area. So we've had two sizable rallies in the market. We've had two solid congestion areas, as we've seen here and here, and now we've broken to a new low. So we're sitting on the sidelines. I want to see where this market settles when the dust settles, so to speak. But our next target, should we see this market continue under pressure, has got to be the 78% retracement level at 1238. If the market finds some sort of footing and solid support, we really need to see a move past and above the 61% retracement. That's where I'm going to peg resistance at, and this is where I'm going to peg support. So traders, as far as silver goes, of course, we talked about over the last week this tremendous breakout that we had below this compression triangle that we had identified. It was actually sent to me by one of our subscribers, pointed it out to me, and I thought it was a absolutely fair assessment of the market. Once we had this break, it was down and out for the price of silver. Now, where can we attempt to find some sort of support? We've got these major tops here and here. They come in at around $16. We're still quite a ways away from there. 16 is going to be marked here. At 1721, we do have a 50% retracement, and that is going to be significant. And then below that, of course, is going to be our 61% retracement, this being our 50% retracement here. Will it find some sort of potential support in this area? It has really come down hard and effectively over the last couple of days. A tremendous sell-off in the market. Right now, I'm putting tentative support at about 1721, and absolute resistance has got to be this top right here, also a 38% retracement, which comes in at $18. This has been Gary Wagner wishing you, as always, good trading. We'll talk to you tomorrow just following the jobs report. Have a great day. Bye-bye.